no surprise to anyone that pays attention to the stock market or investors of Games Workshop in particular that its stock has done very poorly in relation to the markets as of late. It topped out last year in September of 2021 at about 12,275. If you're not familiar with Games Workshop stock or the stock market, if you were going to look up the ticker, it is GAW, and it is traded, of course, on the London Stock Exchange. So since it peaked out at 12,275, it is currently at 6,330. So if we take the measuring tool here and we just look from the peak last year, roughly 1 year later, the price is down 48%. So 48% of Games Workshop's stock value, or the value of the company itself, since it is publicly traded, has evaporated in the last year. So it is down 50% almost in 1 year. Obviously, very, very poor performance for a company that is both billions of dollars and also profitable. Now, that being said, where is it headed and what was the recent move and also what caused the recent move? Well, let's zoom in here and take a closer look. Let's take a look at what has been happening. So most importantly, obviously, we see there's a clear topping pattern taking place up here at the all-time highs. And since then, it's sold off and it has consistently put in a low, then a lower high, then a low, then a lower high, low, lower high, and then come down here for a low. And now here we threaten that previous lower high, which potentially would be the beginning of, or at least the potential beginning of, an uptrend. Now, that being said, we got rejected at those levels. We got rejected at the 200 moving averages. And then since then, we have melted down back to the lows. So typically when you're putting in lower highs and lower lows, after you put in another lower high, you would expect to put in another lower low. So that wick actually took us down to threaten those lows and potentially put in a new all-time low on this trend, or as we like to refer to it, a cycle low. So now that being said, let's look at the actual stock price and see where we're headed. So it's very clear here. We have our 200 moving averages, the exponential and simple moving averages. When they are blue, when they're in an uptrend like this, everything is bullish. We're likely to continue. When we break down below those, and those are essentially just our mean or fair value based on the last 200 days. So once we break below those, once the slope on them flips down and they turn red or pink, we're obviously in a bear market. So we're in a very strong bull market here since the Rona lows, and we have exploded to the upside. And then since last year, roughly September of 2021, we entered into a bear market. And you will regularly throughout the bear market retest the 200 exponential and simple as resistance. And if they continue to act as resistance, you'll see a rejection and then likely continuation. So if we have a high, then a low, then a lower high, then a lower low, then we put in another lower high, we would expect next another lower low, which we did actually see on the wick. So at this point in time, it seems likely that we will get continuation. So we're going to go over here to our Fibonacci tool next, and we're just going to take from our Rona low right here and just start drawing our tool. And then we're going to go up to our peak high right here and place our second point from the tool. I'm going to just extend it out to the right so we can see how current price action corresponds with that. So if we go up to the all-time high here and we take the Rona dump from March of 2020, we'll see we now have our Fibonacci tool on the chart. And what this represents is essentially percentage drawdown. So if we have from the bottom right here, price of GW stock was 3,575, and then at the peak it was 12,360. All it does is takes a percentage of that move and gives it back. So typically what happens is you'll have a strong move to the upside, and then afterwards you'll have a retracement of a portion of that move. There's many different ways to calculate that portion. You can use the Fibonacci method, which uses the 236, the 382, the 618, etc. Or you could use Charles Dow theory, which is 50%. He says typically that when you have a big move to the upside, that afterwards you'll have a 50% give back before you continue to higher prices. It's not an exact science, but obviously we can see some correspondence at these levels. So here we found support at the 236. We broke down and found support at the 382. We broke down from that and found support at the 0.5. We then bounced between the 0.5 and the 382, overshooting to the downside, slightly overshooting back to the upside, and then here we are back down, breaking to the downside. So this was a strong support level in between the 0.5 and the 382. We have lost that support level, so now it seems likely we'll come down here to the 618. So my next short-term target for Games Workshop stock is 5,735. If we continue to break down from here, the next target would be 4,665. And that would be just from the most recent move. Now, it is worth note that it is below its pre-Rona prices, which is obviously not good. many other stocks, particularly in the United States or stronger stocks based on their currency, based on the current market, are substantially higher than that. Some profitless tech stocks are substantially lower than that. So, and even profitable tech stocks as well. So now we're going to just kind of zoom out here a little bit more. This is obviously just a price action, March of 2020 up to, the top of September 2021. So basically 1 year. And then since then we have about a 1 year retracement right here. But I just want to zoom out and look at the overall way Games Workshop stock has been performing. So for a long time, it basically just went sideways and did very little. And then we actually saw a bottom here in 2016, after which it went absolutely parabolic. So we're just going to take our Fibonacci tool once again and just put a Fibonacci level at the bottom there. And then we're just going to draw this one all the way to the top as well. I'm just going to switch the color on this one to green just so it stands out a little more. I'll just make it a slight bit heavier lines there. So we can see the 236 for the macro for that entire 2016 bull run is slightly lower than the 618, but roughly at that same 5,615 level. We talked about the potential to come down here to the 786 in yellow, or even potentially come down to the Rona lows, which actually conveniently line up almost perfectly with the 382. So the Rona lows, the 382, are at 3,385. Current stock price is 6,330. So that is the most likely area that we would come down to if we're retracing this entire 2016 to 2021 market cycle. So this would be a 5-year, macro bull market. And now we have entered into a clear bear market retracement of that. So the likely area for retracement would be the 382. So from where we're at currently to selling off to that level, we're talking about a roughly 46% move, continuation to the downside from where we're at now. Does this have to happen? No. I would look for support at about that 55.90 level. But if we do lose that level, it seems very likely that we'll come down here to the macro 382 here in green. So that being said, we have some targets to the downside. We have some clear levels to watch out for. What I want to do is shift out here to the longer term time frame. We can see obviously when we're in a bull trend, the moving averages are blue and we're above them. When we flip into a bear trend, they flip pink. And then obviously flip back blue again when they're back in a bull trend. Here we're very clearly in a daily bear trend. So now I want to look out to the weekly chart and see how that corresponds. So here we have our weekly chart, and we know similarly what happened on the daily chart. We basically came down to the 200 exponential and simple, oscillated around it, and then eventually broke down from it, back tested it as resistance, and then we went lower from that point in time. And if we look at the weekly, we're in a very clear bull trend right here, but now here we're very close to flipping this into a bear trend. So it seems very likely that actually this long bull trend we see right here is going to be corrected now on the weekly time frame. And if we just zoom back out, we'll see that is the exact bull run that we were looking at on the daily, the full bull run going back from 2016. So again, we have a very strong parabolic move to the upside here in blue, and now we're getting ready to put in a potentially equally strong move to the downside. Now, will it give back the entire move from the bottom to the top? No, not likely. It will actually just come down to initially the 236 or potentially the 382. So that is basically what I'm looking at right here. That is a little bit of a detailed breakdown on the technicals of the actual chart pattern itself. And then obviously we take a look at the news that potentially caused this sell-off. Games Workshop has come out and said that they expected increase in revenue, but decline in profitability. They expected all of this, so this is not technically a surprise. It's just a surprise to the investors. So that being said, they did not disclose in advance that they were expecting any kind of slowdown or anything like that. So this really was a surprise to investors. So now investors are going to think of this as a potential for more surprises going into the future. As where when companies warn about a miss or potential miss, they can prepare in advance for what's to come, as opposed to just dropping it on their investors all at once. But obviously we can tell that management has been doing a very poor job since they peaked out right here, as we're seeing essentially Games Workshop stock plummet 50% from the all-time highs. And for comparison, you can compare it to like a major index or another player in the field and see how it's doing relative. That's absolutely fine. It gets very, very subjective when you start to do that stuff. So I would rather compare it to itself. And the truth is, Games Workshop stock has done very well from that 2016 to 2021 period. And then from 2021 all through 2022, it has done very, very poorly. So it seems very likely at this point in time that after extreme overperformance, that we will likely see extreme underperformance and more pain to the downside. So we have some targets, we have the news, we have the breakdown. If you enjoyed today's video, make sure to like and subscribe. This is not the typical content I like to do, but it is right up my alley. So if you do enjoy this type of video, make sure to like and subscribe. Also check out our regular videos, our daily content, reactions, reviews, and news, painting, modeling, conversion tutorials for Warhammer 40,000, Kill Team, Necromunda, Age of Sigmar, Warcry, and of course some Horus Heresy as well. So that's it for today. Warhammer Man Studios, I'm Warhammer Man, and I'm out of here.